everyone, and welcome to Insider Financial Talk Stocks. My name is Alex Carlson. I will be your host today, the editor-in-chief of InsiderFinancial.com, and in this video, we will recap today's market action and discuss our game plan for tomorrow. But first up, to get our market-moving reports on top small caps, click that link in the description or go to signup.insiderfinancial.com or sign up with your email on any of the pop-ups on InsiderFinancial.com. After you sign up with your email, you can then sign up with your mobile. Mobile is the fastest way to get all of our reports, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, be 1 plus area code and number. Never begin the format with 0, it will not work. And after you sign up, you will get a welcome email, which includes a free copy of the Insider Financial Guide to Penny Stocks ebook. Our ebook, our email service, and our text messaging service are all free service from InsiderFinancial.com. We do not run any paid subscription service, no Discord rooms or Telegram chat groups. Well, guys, AI stocks tanked today as the euphoria surrounding Nvidia and its strong second quarter results and guidance faded. Enterprise software company C3.ai gave up earlier gains and fell nearly 12% in midday trading. SOUN and BBAI also were down over 6% each. Microsoft slipped around 1.4%. Adobe, which has recently been praised for its AI offerings, lost 2.5%. Google fell 1.4%, and Amazon fell 2%. And what's happening, guys, it was with Nvidia, it was simply buy the rumor, sell the news. The stock was bidding up ahead of the earnings report. Everyone was expecting a blowout number. We got that, and immediately it opened at just above 500 and sold off throughout the day. If you look at FinViz, it was right at trendline resistance. I missed it. I should have bought some puts on at the open today. I just felt that I saw a dip below 500. I thought they were going to come in and buy that dip, and that's why I didn't do anything today. It's been a tough week. There's just, I don't have a lot of conviction in anything right now. Right now it is selling rallies, puts are banking, calls are just, there's no action there. I had on Monday, I bought calls in Tesla when it opened at 221. I sold too soon. Stock ran all the way to 240. Saw it pulling back this week. I thought they'd come in and buy the dip, and Tesla is faded as well. Tesla closing here at 230. Tomorrow, Friday, is option expiration. I think it's going to be a tough day to trade. We got Jackson Hole, Fed Powell chairman, going to be speaking at 12, and that is going to be the focus. Those are the two events of this week. It was Nvidia earnings and then Jay Powell and Jackson Hole. And in terms of Nvidia, a number of analysts, they praised the company's results and guidance, with some calling the outlook a guidance for the ages. You had some analysts come out with $1,100 price targets, $800. It was just, the analysts are loving it. But if you really think about it, today was really like a rug pull event. Investors just sold into strength. I think there's just a lot of nervous fund managers right now. They either, they're worried that, about the markets pulling back, with treasury yields over 5%, it's makes the argument, why be in stocks when I can go into treasuries and get a risk-free 5%, T-bills, T-notes, anything under 1 year's over 5%, 2 years over 5, again, over 5%, 10 years over 4%. So again, there's that argument, why risk money in stocks when you can get that money in treasuries? Even savings accounts, Capital One paying 4.3%, you're finally getting a return on your cash, which you couldn't get that for, the past, 15 years. So again, that is what is going on right now. And economic data today was overall mixed. The number of Americans filing for jobless claims in the past week again fell, pointing to continued resilience in the labor market. On the other hand, you had durable good orders in July slid much more than anticipated, giving strength to the pause in rate hike scenario. And then tomorrow, Jay Powell's. Some traders, they don't think he's going to come out and be hawkish because the market has been pulling back and you have yields so high. The bond market has been, bonds have been selling off, yields have been going higher. So if he comes out hawkish, that's really going to drive that yields even higher, bond prices lower, and I don't think he wants to do that. I think he's going to try and tread the line between being hawkish and dovish. But if you remember last year, he came out very hawkish, and that really set the tone for the rest of the year. And that's when, markets really sank in the Q4 of last year. So again, it's going to be pivotal, and it's really, I think, going to set the tone for the last quarter of this year. Everyone's on vacation right now. Volumes are light. That's also why Nvidia, Tesla are pulling back. It's very easy to pull back in light volume. You don't have a lot of buyers like you did in July. August is typically a very, very light month, and everyone's on vacation. But if there's some concerning about the yields. Treasury bill yields were above the earnings yield on the S&P 500 prior to the market sell-offs of the early 1970s, early 1980s, 1998, and the nearly 3-year bear market of 2000 to 2002. In other words, it is unusual for yields on risk-free cash assets to be above the earnings yield on stocks. When this has been the case, major equity market corrections have ensued and short rates have come down. The largest equity market declines were seen when we had the combination of negative cash-based ERP coupled with recession. So we had 1973-75 recession, 81-82 recession, and 2001 recession. Inverted yield curves and negative growth in real monetary aggregates also preceded these recessions and bear markets. Those are arguing that the yield curve will disinvert and resume a normal upward slope by way of long rates rising relative to short rates are making an argument that has zero precedent in U.S. history. So why am I talking about the market the macro picture if we trade small caps, penny stocks primarily? It's because, as I've been saying over and over again, that sets the theme and the tone for the markets. If you have a bull market, people then rush into small caps. They put more risk money to work, and you get the short squeezes, you get the big moves, and right now we are in a risk-off mode. And again, in July, it was risk-on. We were talking about short squeezes. We got Tupperware. We got Yellow Corp, Carvana. It was a great time to be a trader. All of those have since pulled back. Yellow filed bankruptcy, hit the OTC. Tupperware is pulled back. So, this is why you have to pay attention to the macro picture. But, the one stock that is defying all of this is Vinfast Auto, VFS. And it has nothing to do with fundamentals. This is simply a Spac play. The company merged with a Spac. It is a low float. 99% of the stock is controlled by the Vietnamese billionaire founder. Only 1% is free trading, and that is what's going on. So again, this is a classic short squeeze and on a low float play. So don't read into it too much. If you are in VFS, I would be cautious. The stock is clearly overvalued. I have no position. I'm not short. I'm not touching it. Wish I would have gone long. Wish I would have traded this week, but I just didn't have the balls to do it. And for those of you wondering what the company does, they manufacture and export a portfolio of e-SUVs, e-scooters, and e-buses across Vietnam, North America, and soon Europe. The company said it operates a state-of-the-art automotive manufacturing complex in Vietnam that boasts up to 90% manufacturing automation and an annual production capacity of up to 300,000 units per year in phase one. Company said is committed to the mission of creating a sustainable future. The company became a full EV manufacturer last year and has since delivered 4 EV models. In Vietnam. On July 28th, Vinfast broke ground for the construction of its EV manufacturing site in North Carolina, marking a significant step in its global expansion and the company's supply chain development in North America. The problem is, what about the cars? Earlier in the year, Car and Driver posted a mixed review on the 2-row all-wheel drive VF8 crossover. The base model is priced at the time from $47,200 with an 87.7 kilowatt hour battery and EPA estimate range of 264 miles. Road and Track was not nearly as kind with its review in May, calling the initial VinFast product for the U.S. unfinished and embarrassing. So that's the take on that. Overall, let's just see what the action is tomorrow. I most likely will not do anything. I'll let the market settle down. End of the week. Don't want to. I only traded once this week on Monday. I don't want to give back my gains, even though I could have made a lot more. I sold too early, but that is, I'd rather have a profit. Bird in the hand is worth two in the bush, as they say, or whatever. So always be booking profits, and it's better to book profits than to take a loss. So that's my trading strategy. And what we do here at InsiderFinancial.com is put stocks in your radar that have the potential for outside moves. As I say repeatedly, there's always opportunities each day in the markets. The problem is identifying which stocks to be in to grab that money. There's always opportunities, but that doesn't mean you're going to catch every opportunity. And right now, cash is a good position to be in. Don't be greedy. Focus on singles and doubles. Get in, get out. Move on to the next play. And to get our small cap reports, we cover low float, short squeezes, recent IPOs, biotech FDA plays, AI stocks, EV stocks, lithium stocks. Click that link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on insiderfinancial.com. No spam, your info is never shared. Unsubscribe anytime. You can even sign up just to see the level of research we do here at insiderfinancial.com and unsubscribe. Finally, Insider Financial and I are not investment advisors. This video does not provide investment advice. Always do your research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. This video is our opinion, is meant for informational, educational purposes only, and does not provide investment advice. Past performance is not indicative of future performance. Thanks for watching. Remember to smash that like button and hit the notification bell to be notified when a new video is uploaded. Have a great Friday, everyone. Bye-bye.